Hi, I'm Mark Anderson, a qualified mortgage broker, and this is step 1 to the mortgage process in the UK in 2022. Step 1. Credit report. Get your credit report. This is essential for you to understand how lenders are likely to view you and if you're someone they're prepared to lend to or not. If you have a good credit report, all you have to do is maintain it to a high standard. If there are issues like you fell out with your telecommunications supplier, they seem to be unreasonable to you, so you didn't pay them, and now they've defaulted you. When you know this, you can deal with it and put yourself in a better position to qualify for a better deal. I recommend you use checkmyfile.com, and there's a link to them in the notes. They provide you with information from the 3 main credit reference agencies, Equifax, Experian and TransUnion. It could also cost you less because you don't need to get one from each. If you've never used them, it's free for 30 days and you can cancel at any time. Step 2. Affordability check with bank or broker. Speak to your bank or your mortgage broker about what you want. They will be able to help you understand how much you can borrow and the amount of deposit you will need, whether you may need to factor in stamp duty or not, other costs you will incur like product fees and to obtain better rates, solicitors fees and valuation fees. A lot of brokers and banks do not charge for this initial consultation. This stage will help you understand the process and what you can expect when you're buying your new home. Step 3. Save your deposit. This can be done in a variety of ways depending on where you are in your journey. You can put money away every week or month into a savings account. You can use a lifetime ISA where you can save up to £4,000 a year and qualify for a 25% or maximum £1,000 bonus. If there are 2 of you saving separately, your combined £8,000 can turn into £10,000 in one tax year. Or you could get a gifted deposit from the bank of mum and dad. Step 4. Fact find. This is when you will have your deposit or be very close to it and go to your broker or bank. Regulated firms need to understand you, your needs and wants, but they also need to gather a lot of information to be able to advise you correctly. The fact find is where we gather this information in detail. It should not feel as though you're in the Spanish Inquisition. The best way to look at it is like you're in a pub quiz, but you know all the answers because it's all about you. Step 5. Documents check. You will have to provide documents to prove who you are, what you earn, and show how you spend that income, mainly your committed expenditure. Typically, you will need to provide payslips or tax returns proving your income, depending whether you're employed or self-employed. Provide proof of who you are with a passport or driving license. Companies now use electronic systems to prove your identity also. Bank statements to show your committed expenditure, the income you receive, usually 3 months worth. This is the minimum you will need, and your personal situation may require additional documentation. Step 6. Mortgage quote and solicitor's quote. Your broker or bank can provide you with a quote known as an ESIS, and this will outline the costs of your mortgage, your monthly repayments, what interest rates you will pay, the type of mortgage you will be getting, whether it's a tracker, a fixed rate and for how long, a flexible mortgage or another option, so you know the costs and conditions. Obtain a quote from your solicitor so you know how much you need to pay for the conveyancing of your new home. It is better if your solicitor is on the panel that your lender accepts. It will cost you more if they're not. Step 7. Agreement in principle. Get an agreement in principle, also called a decision in principle. This gives you an indication of the mortgage you can get. When you provide this to the seller, it provides them with the assurance that you can buy the property. The checks to get this are less, so it's by no means guaranteed, but your bank or broker should have all the information needed to make sure you meet the lender's criteria. An estate agent will most likely not take the property off the market without an agreement in principle and your solicitor's details. Step 8. Look for your new home. You can look on Zoopla, Rightmove or PropertyPal and register with local agents. View the property you want at least twice to make sure it's the right one for you. Make sure it's within affordability limits you have been advised by your bank or mortgage broker. Mortgage brokers can do what sometimes seems impossible, but we have limitations, and making a £400,000 home affordable with a budget for one for £200,000 is not one of them. Step 9. Make an offer. When you do this, you need to pay attention to the current market conditions. That's either a buyer's market, a seller's market, or a balanced market. How to make an offer on these markets are similar, but you will need to use different strategies. In a buyer's market, you may get a really good deal if someone really wants to sell. If you're in a seller's market, be careful not to bid so high that the property is devalued at valuation. This could mean that you have to either find a difference with a higher deposit, or you may be unable to buy the property at all. The seller may put the property on the market again because they've got used to the higher property value, or get you to apply to another lender who may value it higher, which takes time and could cost you more money with no guaranteed successful outcome. Step 10. Mortgage application. Your offer has been accepted and now you can apply for the mortgage. At this stage, your bank or mortgage broker should have all the information required. Exceptions to this or when it's taken a while for you to find your new home and get an offer accepted. In this instance, they may need additional payslips or bank statements. During the application, some lenders may ask for additional supporting information, as this is where they take the microscope out and check everything thoroughly. Step 11. Valuation report. The simplest valuations from a lot of lenders will be free. The valuation report is for the lender's benefit only, and they are not obliged to provide you with a copy of it. It is designed to help them make a decision on whether the property is worth the amount they are prepared to lend on. If your offer and the valuation are reasonable, then all is fine. If the value of the property is for less, it could result in you having to find a higher deposit, push you into a higher lending bracket, costing you more in repayments, and possibly having a higher lending charge added to your costs. For your benefit, there are other types of surveys ranging in quality and pricing which you would have to pay for, and the mortgage company may not accept unless pre-agreed, but these are designed to give you an understanding of the property and its possible future flaws that you would inevitably have to repair. I will be doing a video on the different types of surveys you can get, so keep an eye out for that video. Step 12. Solicitor's Welcome Pack. This will include documents regarding the property. They may ask for between £250 and £300 to cover searches, which can take 4 to 8 weeks on average, depending on what part of the country you're in. Generally, other payments are not required until later in the application. Step 13. Mortgage offer. You have now got to the point where you can say you will own the property, as long as you do not lose or change jobs during the rest of the process or have any other material change that affects the conditions of the offer. Step 14. Buildings insurance. Get your buildings insurance in place. This is a condition of your mortgage offer. It has to be in place at the exchange of contract stage. You do not have to get possessions covered, but in saying that, the possessions you have are of some value to you, otherwise why do you have them? Step 15. Exchange of contracts. Congratulations, you're now the proud owner of your new home. This is the penultimate stage where you sign and are witnessed agreeing to the purchase. The deposits are given to the solicitor and you agree on a completion date. If you decide after this stage you do not want to go ahead, then you will most likely lose your deposit, but may also be liable for additional costs as well. This could be a very expensive non-purchase. Step 16. Completion. The last stage, which is usually a week, but can be the same day or a bit further away depending on both parties. This is the day you get the keys and you're able to move into your new home, have new adventures and create new memories. Mortgage warning. Please note that we have to let you know that your home may be repossessed if you do not keep up repayments on your mortgage.